Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for one wild trading day on this Monday, the 12th of May, 2025, about 6:10 p.m. Central Time. So, this was obviously an important weekend as China and the U.S. were meeting. And going into it, you had heard President Trump saying he thought an 80% tariff was fine. I didn't buy into that. I thought that was a negotiation. And I was looking for 50, 60% tariffs. We were all blown away. I mean, if you went in thinking that it's going to 30% tariff, you're probably 1 in 100 or 100,000 that predicted that. That is what occurred. And frankly, the president opened the door for 10% tariff because 20% of what's left is the fentanyl tariff. And the proposal was made that if China can stop fentanyl from coming to the United States, that 20% can disappear. So the first thing that's going to happen is ships are going to get loaded with merchandise. Merchants that wanted to buy their Christmas goods, they're going to buy it in droves. The ships are going to get out of there as fast as they can so that they're not tariffed again if this thing should fall apart. What I do think is it won't. And the reason is the test was made of the U.S. onto China. China didn't test the U.S. The U.S. tested China, and in the end, China didn't break. It's really that simple. Do you remember Zelensky and Trump in the Oval Office? And Trump told him very clearly, you don't have a hand to play. Well, let me tell you what happened here. We, America, had played our hand, and China didn't blink. They got hurt. They saw the hurt. You saw it on factory gate orders over the weekend. You saw it in their CPI. Factory gate orders, that's like their PMI, down 6 months in a row. CPI down 3 months in a row, and they're breaking, and there's hurt there. And Trump was smart enough to follow his own advice. Applaud him. He played it right. And he ended this. And he just said, let's get back to where we can all talk. And the funniest part was, who's to blame for the China not, this is very important, for China not going and finishing up phase one of the Trump deals back when he was the first term? They're blaming Biden because China said, well, it was COVID, we couldn't go through it. And when Biden took office, we just weren't doing it. And nobody from America called us and said we had to. Shame on you, okay? Or us, maybe that's the right thing. But you have an easy scapegoat here. So both leaders, they'll probably talk this week, wouldn't surprise me. You had another win in that an American, a dual citizen of America and Israel was released by Hamas today, as Hamas wants to show a good faith into a negotiation. It didn't budge Israel, but this next step is about the United States and Hamas, really. And I think you saw that with what happened today. I didn't hear diddly about Iran and the U.S. It got lost in everything, but I want to catch up on that. The other package you have to remember, and then I'll get on to everything for you. You have the SALT package, and they're floating things. You got a bunch of unhappy East Coast and California politicians in the House, not happy. And that's because they took the SALT projection, in other words, the cap, and they want to raise it threefold to $30,000 if you make combined under $400,000 a year with your spouse, or I don't know what the number is independent, might be $200,000. Because of what's happened in taxes, they don't mention Illinois. I think we got the highest tax in the country, real estate and the like. And I wish they'd mention us because it's painful here. But we'll see what happens. I didn't hear anything on Social Security. I saw that trying to eliminate taxes on tips, that was in there. So we'll see where this all goes. In terms of news tomorrow, you remember, you got to take everything now and understand what happened this weekend. You're going to get the National Federation of Independent Business coming out with their April Optimism Index. It couldn't have been good. Last month was 94.7. The April Consumer Price Index data, does it matter? I'm not sure it does. It's backward looking. We had the tariffs. Did you see today the budget deficit that the Fed ran? Did you pay attention to that? All right, the U.S. We went from a big deficit to a big surplus. Now, part of that is taxes that you receive in the month of April, but part of it's also that most of the month we were collecting big tariffs. Things to think about. May will be the first full month where we see tariffs coming in that we know are reduced. If countries don't meet with the U.S. in the right way, do they get a bigger tariff? What happens at the end of 90 days? My guess is at the end of 90 days, no matter what happens with China, they'll either be 30% or they'll go to 10. That's my guess, unless something doesn't go right in this non-signed deal, an oral pact. That's really what went on. The April Consumer Price Index, I'm going to wait on it, not get excited, as I said. Redbook Group sales, they've been running 6.5%, 7% increases. They've been doing good. And the API numbers are going to be important. Now, oil has come back from the depths of being near, $57 a barrel. It has come up rather sharply. In fact, we can look at that right here and see that U.S. WTI is back to 62, Brent is back to 65. This is a sigh of relief for the oil companies, for OPEC. Trump's going there now to meet with everyone, and oil's back up because, in part, the U.S. and China have agreed. They tested each other, stop it. They have to recouple. They don't have to be bosom buddies. Yes, you've got to move factories to America for companies that want to do business here, and trade with China will, over time, have to switch and not be as much of a deficit. That's my prediction as to where you're headed with all this. All right, and pressure will stay on companies to move to America. That's the way I look at it. Bonds and notes, as you saw, yields went back up. And that's because you went to the brink of possible recession, and now you've got some really good news. And even the critics of Trump have to say that so far, the duckies are falling in order. Could he have avoided doing this whole thing with China and just had a discussion? That's something that has to be discussed. I don't know that the attack had to go the way it was. Why not pick up the phone and talk before this? The stock market. A huge update today, not new highs, a big update. Now, you'll hear some people saying this just guarantees you're going to go up. You'll hear others saying this completes that bear market bounce that we had. We're going to find out. Gold got its head handed to it today for one day. For one day, I don't know that it's going anywhere down. Dollar came roaring back on the news at the expense of the euro. So let's take a look at what we have. For the first time on a weekly basis, all the way back nearly to the beginning of the year, into February for certain here, as you can see, the market is back over the 18-week average of closes. So we have some upside bias. Has this it, and does the market peak out against these numbers? That's the big question. When you and I take a look at where the market is right now on the S&P index, you can see the low and where the markets come. I had mentioned to you, I thought this would be resistance. Well, today you cleared that hurdle to a degree. You got to hold it. Tuesday reversals scare me. If you've ever read Trader's Almanac by Yale Hirsch, you learn the probability of a big move on a Monday often leads to a Tuesday backing off of some of that. Does it have to? No. It's not written in stone that it has to. It's just a high probability. When you take a look at the swing line, you have higher lows, higher highs, and you've had that in place. The market's also been over the 18-day average of closes now for quite a while. I thought that if you ran, you might get into, and just go to the videos you have here, the 100 to 200-day average, if it could clear the Bollinger Band. And as it turned out today, the Bollinger Band went right to that number. That tells me that the odds of this market just running from here are slim. Doesn't mean it can't happen. It is not something that I'm saying go short, this market's coming down. That's not what my work does. What my technique would do is say, if you're long because you have an embedded reading, this is the first time, if you're long, that you've hit the Bollinger Band in these numbers since all the way back here. Do you disagree with that? So we're going into February. My work says you cut down your position. That doesn't mean you have to. That's what my work says, and that's what I would teach. Do you have to be out? Not until you lose the embedded reading. But understand that you've really spent a lot of power to get here, and the market's still embedded, and it's still bullish, okay? We understand that. I would have said the same thing in the NASDAQ as it hit that today. Yeah, it closed over it. It doesn't matter. You're in that zone. You've still got all this to clear if you're going to go for the new highs in the market. You have the embedded reading at work in the Dow. You're approaching the upper Bollinger Band on a day when everything else is there, as you've just seen in those. Yeah, I think the professional money would start taking the positions down. That doesn't mean they're coming out. If you have 10 contracts, maybe you go to 5. Got what I'm talking about? If you have 2, you go to 1. Whatever. When I look at the Russell, couldn't even make it to there, but it made it to the Bollinger Band like the rest. I'd be careful. This has traditionally been the weakest of the indices. If it loses its embedded reading, the odds are it's going to go back to wherever the 18-day average is. I'm not saying it's happened yet. It's still embedded, but it's the time, I think, to cut those down. And, just look at what I told you last Thursday. I said, I don't know that this market's going to have the power to hit the Bollinger Band. It's high enough where most trading systems that I have studied would be saying, okay, we have the embedded reading, but you're starting to stall out. Be a bit careful in that trade. And that's pretty much how I'd be looking at it. Now, if we take a look, and let's get that back, you can see today you stepped away. Be careful. Tomorrow's going to be an important day where you test the embedded reading. I didn't say you come out of everything, not by a stretch because it didn't hit there. I said that earlier. I was saying that back over here, that I thought the pro money was taking it off. This is a vertical run. Markets like to give back some of that at some point in time. In the 10-year note, wow, you've gone instantly. Just think about it. Since May, here's May, you've gone from the upper Bollinger Band to the lower band in a 2-week period in the market. And you've hit the 100-week average. So this should be something of a support zone. But as I said, the fact that trade with China is going to be there is so important. It does not mean that companies and suppliers aren't going to move away from China. That is not what I said in any manner. Where they can, they will. But there are things that you can't do with it, all right? And everybody got to look at what the next 3.5 years of Trump looks like. So be ready. He's got his political power right now. If he can get the tax bill through and he can get other countries in, come midterms, what are you running against him on? That becomes the biggest problem. You may not like the man, but what he's doing is so far looks like it's working. And think about how smart the Fed was by not allowing itself to get goaded, not get into that, and saying they want to see how this shakes out with tariffs. Nobody saw this coming this weekend. That I'll go on record stating. You may have. You're one of the few. Lower highs, lower lows, down into the 100-week average, along with the Bollinger Band, and you're oversold. Now, you could embed. If you embed, you start going the other way, then interest rates are taking off on you. Remember, CPI is tomorrow, but I don't think it's so backward looking with all the new events that have happened. I don't think that I'd put a lot of faith in it. Lower low, higher high. But look at how the dollar held. My last report. Do you remember when I did my last dollar report? It was the one before I just updated you on the stock indices. Looks pretty good to me. What about the gold report, where I thought 3,500 fourth price count could be a problem? We thought 9,800 could be a bottom area here. So rare you get to a fourth. And if you kept going down, I said, then you're under 90, maybe the 88 level for a fifth count. That's pretty hard to believe. Well, as it turns out, that's exactly what it is. Now, you're getting the correction, you're getting the shorts being taken out of the market or taking themselves out. People are trying to reassess what's going on. And in the euro, you've just come From the 115 area, you're pushing right now 111. I mean, these are radical moves in major currency plays. In the pound, it got hit with everything today too, coming down. And good news for the pound. It made a great deal with the U.S. But now they're going to start probably cutting interest rates, and the market's going back to how does that impact the pound. They probably want that down to spur on trade. In Bitcoin, well, I wouldn't be surprised. You got to be careful right here. You're flirting, as I'm talking to you, with losing the embedded reading. If it's lost by the close tomorrow, I think you wipe your hands of these trades, IBIT, and I'd be looking at Bitcoin as well and just saying if they lose embedded readings, time to go. I can tell you my clients are jumping for joy because we did certain things. If you're a subscriber of mine to my morning videos, not my morning flash here, the morning videos that are private, only for paid subscribers. In Brent, well, look at how this bounce came alive. Now you're getting into overbought territory. You've got a 70 reading. I view any reading over 70 is now getting into overbought territory. The trend is back up. Supports at 63.79. If you go to WTI, on this rally, you're not yet overbought. But if you woke up in the morning and you're up probably 50, 60 points, you might be right there. Support back here, 60.87. But what are you going to do? Buy at 60.87 and put a stop under the most recent low? That's going to be a pain trade. So I think a lot of traders are just saying, I'm watching. The one thing I did say over the weekend is I think gasoline is into that June trade where it's going to be higher prices at that point in time. You see the higher lows, higher highs. I would not want to live in California. If you've been reading what Gavin Newsom, the governor, is saying, $8 gasoline. It's always high, but $8? Why aren't the people revolting? I don't get it. They're closing 2 refineries there. You know, they've got their ideas of how they run things, but they're going to pay for it through the nose right now. I'm not saying it's wrong. There's a lot of wildlife. There's a lot at work there. There's got to be a better way to get this done than he's doing. But that's what could happen with them shipping charges and the like, and where they're going to get it all from with those refineries gone. Higher lows, higher highs, right into a resistance area. No, this is not where I'd be telling you to buy. This is where I'd be telling you, if you were long, to take some money off the table. And on the next break, get yourself ready to deploy money possibly. In the natural gas, you're up to the 100-day average, the Bollinger Band. These are not the spots where you're going and buying. They're spots where you're supposed to be taking stuff off the table, not going on the table. So we'll see how the stock market fares in the morning. Another thing for you to fare is my Mother's Day sale. It goes on this week. It ends, I think, right towards the end of the week. 1/3 off any of my subscriptions for my 3-month combos. And we've done away with introductory pricing for 30 days and all that. It's not going to be anymore. So if you're waiting for that to come back, it's nixed as of now. This is the way we're going to go. And it won't always be 1/3 off. It only when it's special. Otherwise, it goes back to our normal pricing for 3 months. But we want quarterly pricing. Let me share with you why. In the first 30 days, I could be right, wrong. I want you to get a chance to see my style, what I do, how it goes about. And I think that's so important. I want a fair chance, and the pricing's not expensive. Let's face it. $36 is $12 a month, where you're getting 20 videos a week. You're getting, if you're in the written subscriptions, you're getting my writings Monday through Thursday, 2 a day minimum, 1 on Friday, 1 Sunday night, and special reports and special updates that I do. All that thrown in. It's a lot for this kind of money. So I hope you do take advantage of it. You go to iraepstein.com, or there's going to be up here, depending on what you're watching me on, either an icon, or if you're on YouTube, over here you'll see that circle with the eye. Give it a click. That's how you get to it. This won't last long, and after that, Going to be a while before you get another sale. So I hope you take advantage of it. I'm Ira. You have yourself a great day. Thanks for watching, and I'll catch up with you in my other videos tonight or first thing in the morning flash video. Take care.